Hello, I'm Maggie Shipley, Private Wealth Advisor here at Argent Advisors. Welcome to our quarterly coffee and conversation series. Dianne joins me today to discuss the flip side of wealth transfer, which involves the complexity that comes with being an inheritor. So we hope to provide clarity and confidence to those who may have or will experience inheritance sometime in the future.
Thanks, Maggie. I appreciate you contributing to the conversation today. So we invite all of you to grab your favorite mug and join us for the next 30 to 45 minutes as we take a deeper dive into this sensitive financial issue that is wealth transfer.
Great. So let's get started. We want to give you guidance on what's being referred to as the Great Wealth Transfer. So baby boomers are set to transfer over 80 trillion in assets to younger generations, mostly being millennials and Gen Z. So it is likely that if you're listening to this webinar, you could be on either end of this wealth transfer, that being the person who's transferring the wealth or the inheritor. So today, if you were to probably Google wealth transfer, the Great Wealth Transfer, most results that would pop up would be advice on estate planning. And today we really want to focus more on the beneficiary because we know this could be overwhelming experience as you're managing new wealth, but also managing grief. So Dianne, looking at wealth transfer from the inheritor's point of view, what do you think are some important topics that we should cover?
Well, I think I'd like to break it down, if we could, Maggie, into 4 or 5 possible financial topics, meaning the types of assets that the inheritor might receive. You know, as you said, in estate planning, we're doing a lot of work on how to deliver that wealth to the next generation. So it really depends on what the wealth is. In other words, someone might be inheriting investment assets. That would be like cash or investments. And that might mean that they receive it outright, and they could receive it in trust. And I know you want us to talk about that later, so I won't say more than that. But investment assets or real property like real estate and other real property like coins or jewelry. So real property is another investment asset or inherited asset. Retirement accounts, IRAs or Roth IRAs. In those cases, you're named as a beneficiary. And then finally, insurance proceeds. And there may be many other things but we're going to cover, I think, those assets and those types of assets that an inheritor would receive because it's the most common.
Yeah, I think those are all great topics and definitely relevant. So I think that we should start off with trust, just because it seems to be a very common estate planning strategy that we see, but also I feel like this trusts tend to come with a lot of questions specifically from the beneficiary. So do you mind walking us through maybe some common provisions that are in trust or just anything that an inheritor would really want to know?
Yeah, it is a great place to start because I think it's pretty popular in an estate plan to create a trust that is available and revocable to the person that created it. We'll call that the gifter, or the grantor is the more official name. So the person that sets up the trust really has all the control in terms of what the trust says, and it's revocable as long as they're alive. But the minute they pass, that trust becomes irrevocable. So now if I'm the recipient and I'm receiving assets through a trust, that's going to be unique to each family. So the distributions might be the entire estate, or it might just be a small part of the estate. So whether you're receiving everything you inherit as a trust, or you're receiving a portion of what you inherit in a trust, that also determines some of the decisions as you go forward. They're designed to be private. So assets that are in trust avoid probate. So this is not a public record. What you're receiving it as a beneficiary of a trust. So you might have, there's different ways you receive it. You might have it and receive all of it outright, and then the trust just goes away. But you could have very limited access to the trust assets. So it comes, maybe in that case, the trust says you, the inheritor, are not going to receive anything from this trust until you're age 35 or 40, or maybe you have access to those assets, but you don't have control over the trust until an age in the future. So again, each trust is unique in that way. And often, so trust assets could come at a certain age, but also access to the principal could come in the future. And maybe the inheritor of a trust is just receiving income for a period of time. And then there's other provisions like maybe it's used, maybe you're allowed to use that pretty liberally if it's for education or if you have a health issue. There's other terms that are pretty generic in a trust and also somewhat generic in the interpretation. So maintenance and support sounds very general, but those are provisions that enable the inheritor of trust assets to access the money.
Yeah, and I think that's such something that's so beneficial about a trust and why so many gifters pick it, because they're kind of made to order and they can
That's
make them
right.
super unique to their family. But at the same time, I think that's why it's so important for the beneficiary to not necessarily worry about maybe the specific assets in the trust at first, but really just like educate them on the provisions, because at first they might think they're inheriting all this money, but what if they can only use it towards health expenses and so on? So I definitely
Right.
think that's really important for a beneficiary to look at when they're inheriting from a trust.
Great point.
And so I think the next thing with trust, still staying on that topic, that we should touch on is taxes. Just because there's different tax provisions that also go along with trust that might be different from other investment in vehicles. So do you mind maybe touching on a few key points that you think beneficiaries should know in regards to taxes?
Absolutely. So remember what I said about the gifter or the grantor.
Hmm.
When they pass, that trust becomes irrevocable. So while the recipient might be receiving those trust assets largely tax-free, as long as they remain in a trust, those assets, the trust, the irrevocable trust will again operate like a business. It will have its own tax ID number. It files it, the trust will have its own separate tax return. They have their own tax rate. So, in some ways that creates a planning opportunity for inheritors. If you're receiving assets in a trust and the CPA says, well, this trust is in a relatively high tax bracket, you're in a much lower tax bracket, there may actually be benefits to receiving the money earlier and
Right.
paying taxes on the trust assets at a lower tax rate. So the issue with estate planning for a long time was about being able to avoid estate taxes. But right now, people can die with a pretty healthy $13 million
Yeah.
in assets before any estate tax is a burden. So it really just becomes, once it's in the irrevocable trust, what's the tax picture there? What do we need to know? How can we plan as it relates to optimizing the tax picture once assets are inherited in trust?
Yeah, definitely. I think that's super important to
Yeah.
understand. And kind of on the topic of taxes, which I think we'll talk about a decent amount, but I think that taxes are specifically important to understand when inheriting real property, which I know is something that you mentioned earlier that would be good to touch on. And
Yep.
taxes are actually an advantage of inheriting real property because of this step up in cost basis, which essentially just means, let's say you inherit your parents' home, and at the time they bought it 25 years ago, it was worth 500,000, and today it's worth 1 million. When you inherit that property, your cost basis is now going to be 1 million. So if you were to sell it on the day you inherit, you would have to pay no capital gains tax, which is definitely a really big advantage and something to consider. And so I think that there's a lot of advantages to inheriting real property, although it might seem like kind of a unique inheritance, different than obviously a trust or just cash. So besides from just selling the property, I know there's other things that you can consider when inheriting. Do you want to walk us through maybe what
Yeah.
other considerations there may be?
Well, I think, again, in your example was excellent. There is this step up in basis, but there may or may not be a mortgage on that property. And can you, as the inheritor, afford to keep and
Mm,
maintain that property? That's something to think about. And a lot of times, that homestead, the place where you were raised, has a lot of emotional attachment. I know you'll touch on emotional attachment and that sort of thing later, but true, when you receive an inheritance that is real property, that is a home, as an example, one of your, maybe the choice is just to move in, keeping it in the family.
right.
I know that's often important, but you got to consider, are you able to maintain it? Can you afford it? And then to your point, there is upside potential. The property could appreciate, and you've received it with that stepped up cost basis. So now you, as the inheritor, can begin the appreciation from that point forward. So there is some real tax benefit to receiving it and selling it at the stepped up basis, or even carrying it forward and appreciation after. And then you could also make it a rental, right? There's, if people don't have a a real emotional attachment to the asset or to the property. Maybe they're just deciding we want to keep it in the family. Do you really want to be a landlord? That's a
Right.
question. So creating a rental property and having it as an investment becomes a question of what am I really netting after I keep up the property taxes, keep up the maintenance of the place, pay taxes on the income that I'm receiving as rental income. So another thing to consider in that regard. So just a reminder, if it becomes your primary residence, so each of us have an opportunity, back to taxes, to sell our primary residence, provided we lived in it 2 of the last 5 years. We could sell it with our own $250,000 exemption. So not only did we get the step up in basis, but hanging on to that property for a while, maybe living in it, if that's an appropriate choice. That could also be a good option to consider in terms of receiving the home as an inheritance.
Yeah, there's definitely like a lot of options when it comes to inheriting property, but I think you're right, especially about renting, just kind of knowing if being a landlord is a passion of yours, because that's not for the
Right.
faint. Like,
Great point.
but yeah, I think the next, moving away from real property, the next investment vehicle that we definitely should talk about is individual retirement accounts, especially because there's been some rule changes.
That's right.
So as of recently, when you inherit an IRA now, you only have 10 years to liquidate the account. So you can still take a distribution every year, but just by that 10th year, you need to make sure that there's no more assets in the account. You can also do a lump sum distribution, but you definitely want to consider how much is in the account because you don't want that to bump you up into the next income tax bracket. So you have to consider, okay, like, do I want to break this up over 10 years or would I prefer to just get the cash out now? And then just
Great
another
point.
note is that obviously if your beneficiary is your spouse, this 10 years doesn't apply to them. They just inherit the account. And then also in addition to just regular IRAs, you also could inherit a Roth IRA, which the 10-year rule will still apply. So to any retirement account. However, just a reminder that Roth IRAs are still tax-free once you inherit them. The same tax provisions apply.
That's right. Even though the money has to come out, it's coming out tax-free.
Right.
Great point.
Yeah.
So what
And
if someone inherits a regular account? So we talked about that 10-year distribution requirement for an IRA, but what about just inheriting like a brokerage account, stocks and bonds, that sort of thing? What's your takeaway from that?
yeah, I think that's a really great opportunity if you're inheriting just a regular brokerage account because there's not that 10-year rule. And the same thing that we just talked about with the real property step up in cost basis is going to happen with all your stocks, bonds, and funds, anything in that brokerage account. And this is a really great opportunity because you could have really highly appreciated assets in this brokerage account that now we can rebalance and take advantage of the step up in basis and not have to pay all those capital gains that may have occurred over however long the account has existed. And a good example is, let's say you're inheriting your grandfather's brokerage account. Maybe he bought Apple stock back when it was $25 a share, and now it's appreciated and you're holding this really large position. Well, this would be a great opportunity. Maybe obviously he didn't want to sell it because maybe there is an emotional connection to this, or, you know, you're watching it go up so much. So this would be a great part to reset and kind of rebalance your account. And I think that something to note kind of on that emotional piece is sometimes you can be like, well, this meant this to them, and you can kind of get caught up in that. But I just think it's a good reminder that we really encourage like an unemotional decision when rebalancing, just because this is honoring the inheritance in itself. You might want to say, well, I want to keep that stock to honor the inheritance, but really like making smart tax rebalancing decisions and just smart financial decisions in general, I think is the best way to really honor that inheritance.
Outstanding point. Yeah. And I would just say from planning on the other end before that person inherits, we often strategically hang on to highly appreciated assets for our clients that are aging and recognizing that they're going to pass it on and that inheritor is going to receive something stepped up. But it was never the plan that they hang on to that individual Apple stock for the rest of their lives also. So really great point, Meg. What about inheriting large amounts of cash? Like, what are your thoughts? So someone receives completely tax-free cash or life insurance proceeds. What what are your thoughts on the inheritance when it's cash?
Yeah, I think a lot of times it does come from insurance proceeds and they'll just be sitting on this large position in cash. And I think that this is an interesting topic because a lot of times this is where indecision comes up the most frequently. And so I think we should kind of just lay out like maybe 3 steps of where you can at least start so that you don't sit in this stage of indecision. So the first priority I would go with would just be creating an emergency reserve. Maybe you already have one, but maybe it's a little less than you'd like. And I feel like this is just a good way to kind of set aside maybe part of that and proceed just to be like, okay, well, in case we have an upcoming expense, or maybe you had something that you didn't feel like you had the cash to do, you can put that aside for the upcoming expense and also just maybe unexpected expenses as well. And then the next step would definitely be looking at any high interest debt you may have, specifically credit card debt, because this is a really good opportunity to, after you've received a good amount of cash, just to get this off your plate. And then lastly, I would just say this would be more specific to your financial plan, like filling in any gaps with retirement or education. And you could definitely allocate some of the funds that way. But I think the biggest takeaway is just that indecision is a decision itself, and cash just sitting there is not being productive for you. So I definitely
Yeah,
think that step one is just going through those 3 steps at the bare minimum.
I really like that. The takeaways, absolutely. Your reserves and your debt, and then finally
Yeah.
creating your own plan. That was, that's, as you said earlier, that's the best way to honor the person that left those resources to you. So really good. Completely agree with all of that. And again, I can't reiterate enough, that's the time where you really want to rely on professional financial advice before making some of these decisions, help with prioritization, keeping the emotions out. I think we're
Yeah.
pretty good about helping to reframe some of those decisions based on whether someone's coming to us. Many of our clients have come to us at that critical point. This is now they've received the money and they want to make good decisions going forward. So yeah, great to think of the 3 steps. Thank you.
Yeah, and I definitely think we should touch on just that emotional aspect even a little more because it is a big part of inheritance. And I think sometimes when the people do inherit this money, they're feeling grateful, but maybe also overwhelmed because they're experiencing sudden wealth a lot of the times, and their financial situation for the better has changed, but it's still changed drastically. And I think that that can be overwhelming because they want to make the right decisions and they may not even know where to start. And so, like you said, I think an advisor is really helpful, and specifically having an established relationship, if you know you're going to inherit down the road, is really important because they're going to understand your financial situation, they're going to understand your goals, and they're going to know you. So in this moment where you're feeling overwhelmed or don't know if you have the tools to make the right decision, at least you know you have someone who can be unemotional in that moment and help you walk you through those steps. And that way you're allowed to be emotional and you're allowed to maybe grieve if that's what you're going through. And I think that that can be really helpful, just having someone with you who's making unemotional decisions and really helping you set up for success down the road.
Completely agree. We are here to help navigate. That's the whole purpose. We are allowing you to take the emotional aspect of this and not eliminate it, not set it aside. Ivan, just look for proper resources for things that the same way we rely on doctors for our medical help. This idea of allowing us to be a resource to you when you have a situation like this, a life-changing event like that, not only the passing of someone you love, but the inheritance that followed.
Yeah, definitely. I think that it is overwhelming, but it's a gift, and we want to see you use this gift in the best way possible to honor the inheritance.
I agree. And I think that if what somebody following this, listening to this coffee and conversation today takes away is that you don't have to have all the answers, and that we can be a resource, that we're there to help navigate, along with some of those great tips you gave about priorities, as well as, understanding what it is you're inheriting. I hope that is useful to anybody
Right. And I
listening.
hope the takeaway is that there's so many different things you could come across when you are inheriting, and that it's okay to have questions because obviously we can't cover every little niche thing that maybe could be a provision in your trust, but that we have the resources to figure it out and help you through that process, I think should be a takeaway.
Absolutely.
So yeah, thank you for watching, and please feel free to pass this along to anyone in your life who maybe is a recent inheritor, or just honestly using this conversation to spark conversation in your own family. As we mentioned, like a lot of times beneficiaries aren't really aware of what they're inheriting, and sometimes it can be a good conversation to have prior to actually inheriting. But yeah, we would love to keep this conversation going, so please feel free to reach out to myself or Dianne if you have any questions. We're happy to talk. But yeah, thanks again for tuning in.
I'm so happy that
And
you brought the topic up, Maggie. I think this is going
yeah,
to be something useful to more people than you realize, and for sharing coffee and conversation with us this year. As I know you're hosting, I think your next one is going to be addressing 529 plans, right? So
yeah,
stay tuned, everybody. Please feel free to share, as Maggie said, and join us next time.
yeah, we can't wait to see you next time. It'll be me and Eric, and we're definitely excited to discuss 529s. There's a lot of new stuff there, so we're looking forward to it.
Great.